Welcome to our call tonight. My name is Alvin Curry. Tonight is January the 11th, 2017. Welcome to our call tonight. Many of you got a message or you got a question asked to you through some form from one of our team members that says, if I could show you a way to write off $6,000 per child every year legally, morally, and ethically, would you be interested in learning? And so as I see many people have joined us tonight, I want to thank you because you are interested in learning. And let's understand this, okay? I'm going to challenge some of the thought processes that you may have already had, or even some of the things that you've learned from people who may have even done your taxes for you in the past. So what I'm going to do and what I have showing right now on the screen is I have the IRS Publication 15, 2016 showing on the screen, and that is the publication that I'm going to use. So if you talk to someone else who says that's not true, then what I would suggest you ask them to do is says, okay, could you read Publication 15 and tell me what that means? IRS Publication 15. If they say that what I'm telling you is incorrect, simply ask them to interpret for you what this means. So we're looking directly at the IRS form. We're not looking at a form that Alvin Curry made up or my company. We're not even going to talk about my company here tonight. We're going to simply talk about how you utilize this form and how do you get up to $6,000 a year in additional write-offs for your children. So let's start here. Family employee, child employed by parents, what this says, Publication 15. Payment for the service of a child under the age of 18 who works for his or her parent in a trade or business aren't subject to Social Security and Medicare taxes if the trade or business is a sole proprietorship or a partnership in which each partner is a parent of the child. If these payments are for work other than in a trade or business, such as domestic work in the parent's private home, they aren't subject to Social Security and Medicare taxes until the child reaches the age of 21. However, see covered service of a child or spouse below. Payments for the services of a child under the age 21 who works for his or her parent, whether they are in a trade or business, are subject to FUTA taxes. Payment for the services of a child under the age of any age who work for his or her parent are generally subject to income tax withholding unless the payments are at work or in the parent's home, unless the payments are for work other than in a trade or business and are less than $50 in a quarter or the child isn't regularly employed to do so. Now, here's what we're going to talk about tonight, ladies and gentlemen. This is one IRS document. There are literally hundreds of IRS publications, as anyone will tell you that does taxes or anything like that. So when you want to get a tax deduction for your child, many of us, I am a baby boomer generation. At one point in my life when I didn't know any better, I gave my children allowances for helping me. But then I stumbled on some information many years ago, and here is just a reference to some of that information just that you know we're not. This gentleman right here, Ron Mueller, is a guy that I have followed over the years, and he's taught me some things that I have learned. He actually had a lot of his work already reviewed by the IRS in changes. So I stumbled onto his information some years ago, and we use some of that today. It says right here, hire your own children to earn tax-free income. If you have a minor child or children at least 6 years old and employ him or them in your home-based business, they are not subject to child labor laws. That's good. No payroll withholding is required if they're under age 18. The wages you pay them is 100% tax deductible to you as a business expense. The income they earn is 100% tax-free. That's as good as it gets. Now, ladies and gentlemen, here's the deal. If you do not have a home-based business, then they're not talking to you. We're not talking to you if you do not have a home-based business. However, we'll talk to you if you're willing to get a home-based business, because this will not apply unless you have a home-based business. Now, hear me very clearly, okay? If you have a home-based business, then you can hire your children to work for you in that home-based business. If you do not have a home-based business and you have them working around the home, as does many parents do, you can continue to get them an allowance, but you cannot write that off. So when we had our children to work for us, what we did is we got a contract and we wrote up a little contract for them. There's several places out here online, one being a company called LegalZoom. You can get contracts, a lot of legal documents filled out, and you just write up what's called a little basic legal contract that you and your children have that says this is what they're going to do for the money. Number two, then you tell when you're going to pay them. Now you have a contract and you enforce this contract that they are going to do this for that money. Now here's the next thing I want to go back to. I want to show you this here because we want to be clear. We said up to $600, but we have to make sure that everyone understands this. Employee pay. This is here from the IRS. This is publication right here. We're on publication 535. If you look right here at the bottom, it says publication 535. So in this publication, it says employee pay. You can generally deduct the amount of employees for a service they perform. The pay may be in cash, property, or service. It may include wages, salary, bonuses, commission, or other non-cash compensation such as vacation, allowance, and fringe benefits. So you can pay them this, but it has to be reasonable for what they do. You can't go out and just say, I'm going to pay somebody $6,000 because they lay on the couch all day long. If you're not going to require your child to do something, you're not entitled to just say, okay, I'm going to write up a contract and they lay around and do that. You're supposed to have a job that they do, just like you have a job that you go to every day. Then you need to pay them. So here's what we did when we were paying our children to work for us when they were home. My wife and I would get them on what's called a custodian checking account. So my wife would have her name on there with the children, and now from my business account, I would write them, in this case right here, if I was going to pay them $500, I would have them doing what I believe to be $500 worth of work. So $500 times 12 is $6,000. So if I have them $500 a month, they need to be doing some work. I would have them do that, and then I would write from my business account in the name of each of my children. So I have 3 children. Again, they're all adults now, but this is just an example. I would have to write each one of them a check in their name. Each check, now we could have one custodian bank account with everybody's name on it. We put that $1,500 into the bank. Now they all have been paid. So the check that I write them would represent my receipt to the IRS that I paid my children to work for them. Now, this $1,500 over here in the bank, the things that they're going to use, we would buy them anyway. We would just take that money and buy them clothes. We would take that money and buy them, if we were going to buy them a phone, if we were going to buy them a computer game, whatever it is we were going to buy them. If we were going to pay for them to have activities at school, they would just have to take that money and pay for those activities. So now what you're doing is you're running a portion of your lifestyle through your business. These are expenses you would have anyway. Buying clothes for the children, these expenses you would have anyway, whatever it takes for them at school there. So you take that $6,000, $500 a month, and you run it through a business into what's called a custodian account. This custodian account, you get it in a bank or anywhere, because children under 18 cannot get bank accounts by themselves. The parent has to sign. So my wife would sign. So now, when I fill out my taxes at the end of the year, I would fill out my taxes to say I had a business here, and on my business, I would show wages I paid to my children. Then my children would fill out their taxes, and when they fill out their taxes, because we kept it under the standard amount, they didn't have to pay taxes. Let me show you how that looks, and then we're going to get ready to go into some questions here. Now, let's take a look. This is a regular 1040 here that anyone would fill out and children actually fill out what's called a 1040 EZ. They wouldn't even have to fill this one out. But this is just an IRS form. You can see it here, and at the top, everybody fills out everything that's across the top there. But it tells you right here, you're married, single, whatever you are. It's right here in terms of exemption. It says yourself, your spouse, and then you would list your children. So if you're a single person, just be yourself and your children here. Then you would come up with a number on line 6D here. That number would be right here. So as an example, if it was 3 in the family, it could be yourself, a spouse, and 1 child. It could be yourself and 2 children. So let's assume for a moment 6D has 3 in it. Now, when you come to the back of this form, you come to the back of the form over here, and what it says here is, okay, the exemption. You still get to claim the children as an exemption because you got them on your taxes. If line 38 is less than 155, and let's say that it is, you get $4,050 per exemption on that. For the 3 exemptions you have on line 6D, you get $4,050 times 3. That's $12,150 that you get automatically. But now, you don't get the $6,000 unless you have a business. Now watch what happens over here. On this side, on line 40 up here, you have itemized or you have standard deduction. You come down into where it says single, married, filing separately. That's $6,300. That's the standard deduction. What that simply means is that no one pays taxes on the first $6,300 they earn. A single person earning less than $6,300 would not pay taxes on that. So if your child worked for McDonald's, if they work for some other fast food restaurant or whatever, and they earn less than $6,000 that year, even though those companies may take taxes out on them, what would actually happen is they will get all of their money back. So when a child files forms and they have less than $6,000 in taxes here, less than $6,000 in income, they will file what's called a 1040 EZ because they're going to get all their money back because they're under the age of 18. So that means they didn't pay taxes on the $6,000, and because you used it as a home-based business, you were a part of a home-based business. Because of that, you get to write off on your taxes as wages. So now what that does is if you had 2 children that you were doing this with, you would be able to write off $12,000 additional dollars in taxes, in income that you would not have to pay taxes on. So what that does, ladies and gentlemen, and I'm going to go back to one thing I meant to get just a minute ago, but let me just digress for just 1 minute here, okay? If you have a home-based business, see it says right here, business income or loss. So whatever expenses you have here, if you had a positive income in your business, home-based business, or if you had a negative income in your home-based business. So if you went out and you made $25,000 in your home-based business, and if you had 2 children and those were the expenses you showed as deductions there, that will lower that $25,000 down to $12,000, because you say I paid wages to my children of $6,000 each. That $25,000 would now be lowered to $13,000. So on line 12 here, you would have $13,000, not $25,000 that you made in your business. But on the other side, if you made $1,000 in business, and now you had $12,000 over here as deductions over here, you would show a loss of $11,000. Now, ladies and gentlemen, I know people are going to say, well, wait a minute, how are you going to do that if you have a loss? Many businesses have a loss the first few years in business. So you take that, you would actually be doing some of that from your household income. Now, you can do that every year because the IRS knows you're trying to run a business. You're not going to be making $1,000 every year and writing off $12,000 on the children and writing off this, because they're going to be like, where you get the money from? And you're not going to consistently lose money in business every year. That's not what I'm saying to you here at all. But I am telling you that in many, many businesses, the first 2 or 3 years in business, while you are financing your business, many people self-finance their own businesses because they can't get loans, they can't get investors to invest in their business in the early days, so they would have to self-finance their business. If you just took it to a traditional employee, if you got a business, you run a restaurant, if you put your money in there, sometimes you'll take your money and pay the other employees who work for you in the restaurant. So again, we're not talking about just going out writing up something on these forms to try to take to your tax preparer and say, I want to write off $12,000 a year or $6,000 a year of my children. We're saying get involved in a good home-based business. Work your home-based business to earn a profit. When you work your home-based business to earn a profit, this is just one of many different businesses expenses you can take. It is just simply one of the most powerful ones that my wife and I took over the time that our children were growing up here, is we would take our children and we would employ them because we needed them to do things. We wanted to teach them good work ethics when they were growing up. So we used them in our business, and then we took that money and we bought the things that they needed, and it worked just fine. So ladies and gentlemen, that is really what you want to do. So when you go back and talk to someone about this, perhaps your tax preparer, if they have differences and agreements in this, I'm not here to try to debate with them. I simply use IRS Publication 15 and IRS Publication 535, which they should be very familiar with. And if you have a home-based business, then you can do this with your child. If you do not have a home-based business, then you can talk to the person who invited you to this call. They will talk to you about how to be involved in a home-based business that they're involved in. If you're interested in that, if not, then we thank you for being on the call. Now, here's what we're going to do. I'm going to end this call right now, but I am going to give you opportunity to ask me questions about this, and I'll pull the publications back up if you like to. And what we'll do, we'll take it decent in order. I'll give everybody time to ask me a question, but I don't like to record all of the questions and all that. So we're going to end the call right now. Just give me 1 second to do that, and we'll come back with your questions and answers. Okay?